Gergely Majoros, miembro del Comité de Inversión de Carmignac. Good morning, Gergely. Welcome. I can't hear you. I don't know if you are on mute.
No, I'm not on mute.
No. I hear you now. I'm sorry,
Okay.
but I can hear you in the first place, but now I hear you perfectly.
Okay.
Well, Gergely, how do you see the outlook for the economy in the coming quarters, especially for inflation?
Look, we have a very interesting backdrop, economic backdrop ahead of us. On the one hand, we have a global strong economic recovery coming out of the crisis last year. And on the other hand, this recovery is actually a very desynchronized one. So there's a lot of differences between countries and regions, wherever you look at. For example, if you think about the US, we believe that there's a good chance that the US economy will overheat over the next couple of quarters because of all that stimulus on the monetary side, on the fiscal side. And really, this is something that doesn't happen very often. On the other hand, if you look at Europe, for example, we are enjoying a very good catch-up, a good recovery in economy, especially as we're going to open the economy more and more. We're going to see that the economy is improving very strongly. And this is also very nice, but we are nowhere near any overheating of the economy, not even in Germany, which is one of the countries that is doing better, let's say, than others. Mm-hmm. And a lot of other countries, if you think of Japan, or India, or a lot of emerging markets, and I'm not talking about China here because this is a different story, but many emerging markets will see a recovery much later than we do because the vaccination is actually much slower. So probably they're going to see a nice recovery in the economy next year. So this is one thing. If you talk about inflation, which is also crucial, especially for fixed income markets these days, what we can say is that probably everybody has understood that in the very short term, we have all these bottlenecks on the supply side. So that means that we're going to have some price pressures, let's say in the short term, but this probably will be very temporary. What is much more important than that is whether beyond those next couple of weeks of months, we can expect something more sustainable, something more durable. And we believe that in the US, there's a fair chance that certain aspects of inflation will be more durable than what people believe. But let's say this is for us a US story only, because in the rest of the world, we don't see that dynamic. So overall, we have a very divergent, very heterogeneous universe, and we really have to take that into account in the positioning of our portfolios.
And in this context, what is the Carmignac's flexible bonds strategy?
Look, we have to say in this context that we will probably use all the flexibility that we have in the fixed income funds in terms of duration management, in terms of geographic allocation, because quite honestly, we have to be prepared in the couple of months that are ahead of us that the US Treasury yields are going to increase further, to reflect really that very strong situation in the US economy, and to reflect the fact that maybe inflation is going to be higher than what most people believe. We have to be prepared also for some more volatility because, if the US Treasury yields go up, this can have an impact on all the asset classes globally. So more volatility is also in the cards. But one aspect we haven't talked about yet is really the fact what's going to happen for central banks. And even here, we have a lot of divergences because on the one hand, we have, for example, the US, and you have seen that this week, the Fed has started to prepare the market really for some kind of tightening of financial conditions in the coming months. And on the contrary, in Europe, for example, we still have a situation where the ECB is probably keep the current accommodation because, as they said, it is way too early, let's say, to start really changing the monetary policy because the economy is not doing that great yet. It's going to improve a lot, but it's let's say too early. So we really have to take into account all those allocation differences and think about it twice. So coming to your question in terms of flexible bond strategy, one of the aspects is to try to benefit, let's say, from this divergence between the US and Europe. In the US, as I said, we have this very strong economy where the Fed is probably going to start its tightening in the next couple of months. We have an inflation which could surprise upwards. So we don't really want to have any duration there. And actually, on the contrary, we even have short positions on US bonds like the treasuries, really to reflect that situation that yields can go up further and we have to protect our portfolios against such a move. And on the contrary, in Europe, we are much more happy to take some durations because the situation is a different one. The economy is improving, but not as far and not as hot as in the US. The ECB is probably going to remain very dovish for the foreseeable future. So on a selective basis, we have different segments of fixed income markets that we want to play. So much more duration in Europe today than duration in the US. And let's say in emerging markets, we also have a couple of different pockets of value that we want to benefit from. And with all this, we try to really construct a portfolio which is, of course, integrating all the attractive segments that we see in the market, especially according to our main core scenario for markets. But on the other hand, we always try to have some positions for adverse scenarios, in order to balance out the portfolios.
And very shortly, if you can answer me very shortly, the last question, where do you see the opportunities, Gergely?
Yes, we are very selective, but there are pockets of value. For example, in credit, we still find issuers which have a good coupons for the risk that we take. This is, for example, the case for reopening names like in the tourism space or in commodities, for example, for all companies. We also see good, attractive banks with financial credit in Europe where we want to have a coupon which is attractive for us. And in emerging markets, as I said, for example, we are positioned in Romania, which is more of a cyclical play, or in Russia, which is more in the commodity space. But let me just say one thing is that we believe that for the coming months, the main question, the main challenge will be to see whether that starting of the tightening of the financial situation in the US by the Fed, whether this is going to have let's say, an overreaction in spread products or in risky assets, because so far it has been very smooth, but we have to be prepared and monitor that very quickly, very closely.
Thank you very much, Gergely Majoros, for your advice. Thank you very much. Good day and good business.
Thank you. Bye-bye.
Bye.